Hey subscribers, good morning. It's Wednesday, March the 5th already. Amazing how quickly time flies here. We're already in the third month of the year. Let's have a look at the markets. Basically, we had a major, dramatic reversal yesterday. Uh, Basically, entirely clawing back everything we lost on Friday and then on Monday. So this really just is a testament to what I always say. It's really just best to stay out of the market when you have these major news-heavy times, such as geopolitical risk, economic data points imminently being released, or certainly earnings, or anything like that. Anything where the news is extremely important, i.e., really could move the market, easily, half a percent to 1, maybe 2%. And that's exactly the kind of situation we had as we came in on Monday morning. So for my part, you saw I did very little in terms of trading on Monday. I cut one position and added another one, a more defensive name, and that actually ended up being very well as we came in Tuesday and had a major rally. Just to give you a little bit of idea of what this looked like, look at the major reversal we had in gold from Friday to Tuesday morning, rally and then sell-off. Look at the inverse of that is the S&P futures, risk off Friday and Monday, and then risk on Tuesday. And you can look at the same thing in some of the currencies. Look at the major sell-off in the dollar and then the rally back in the dollar. This is the dollar yen cross currency here. So anyway, so that's that. So if we look at the S&P, you can see a clean snap higher. This looks like it should have enough room to really get us toward the 1900 area. It's hardly going to be a straight shot, but I think we're now well on our way to claw ourselves higher again. My upside targets for the next few months are 1920 to 1970, sort of where I think us going, and then maybe at that point, then we'll have to start thinking about calling an end to this cyclical bull market. But we'll see. We'll evaluate this as we go along. Russell 2000 even nicer. I mean, just the bears are just really hurting. I spoke with some people yesterday that are continue to be very bearish, looking for 5% pullbacks and things like that. And really is it hurts me to see them getting hurt like that. It's just not a time to be going against the trend. Now, can we get a major reversal of everything we did yesterday and start calling the end of the bull market? Yeah, of course, anything's possible. But right now, the likelihood just isn't there. Like I said yesterday, if you look at some of the individual sectors, anything from energy to look at this triple top, which essentially does not, it rarely exists, right? I discussed this yesterday, so really I think this should take us higher. Look at the industrials. I also talked about yesterday. Yet they saw a breakout, not surprisingly, obviously, as well. So all this kind of stuff we're seeing, and um, it's just not bearish. Okay, look at the transports. I always look at big, beautiful breakout. Of course, we took profits in Ryder yesterday. I think we made like 5 or 6% on that. Beautiful trade all in the back of this major. I mean, it's and by the way, I'm gonna keep talking about this trade as an example over the next few months probably because it was just a perfect setup, and I think it really exemplifies the probably the most powerful setup I know, which is really the rocket launch setup, which is really what this was. Look at the I look at the financials, very important. Beautiful move here yesterday on the XLF. Interesting enough, the BKX didn't do much, and that's a little bit concerning. Oops, it's BKX. If I could type this in right, BKX. There you go. This could have been a bit of a better trade, but well, it did. I should say it rallied, but it could have been a bit nicer. Quite frankly, I'm not quite sure my chart's correct, but look at Schwab. Some of the brokers that had great moves yesterday. I'd love to chase Schwab here, to be honest. So I'm considering that. Go look at Goldman Sachs. We're long Goldman Sachs. It has reached its first price record. I'm going to keep it on, see if we can get this past the 50-day here, maybe to 172. Look at Wells Fargo, which I'm also still long, which now gets us looking through the portfolio, by the way. That's what I do here. AIG, I would still love to buy AIG. It's really just I mean, it's just beautiful. It's right back above this area here, the 15 100 moving average. So although of course I am long quite a few financial or a couple of financial already, so maybe I'll hold back on that. By the way, just so you know, the portfolio is up about 5.25% year to date. For my part, I'm quite happy with that. Someone yesterday told me that's nothing. Maybe if you trade penny stocks and you had a runner that like ran 300%, that's nothing. But likelihood is that if you trade those kind of stocks, then you'd probably be down 300%, or no, I guess it can be down 300%, but down 100% by the end of the year. Anyway, let's look at other stocks in the portfolio. CMG, Chipotle Mexican Grill, beautiful stock, beautiful trade. I've talked about this for weeks now. It just hasn't done anything. Finally, yesterday popped 5 or 6%. I took half, or a little bit more than half off. Goldman Sachs talked about ABX. Typical. You're not going to expect a big rally in gold and gold miners and a big risk on day like yesterday. But I think all in all, this stock continues to be in a decent position. It's not falling apart or anything. Neither is gold. So this looks okay. Maybe we'll trim this position, add back on once it can act again, better again. But we'll see. Guild. I was close to cutting this yesterday, but then it ended up perking up a little bit yesterday. Quite frankly, it could have done a lot better, right? But it's still in this consolidation phase, so I'm going to give it the benefit of the doubt here for a little bit. PBI. This is the stock I bought on Monday as a Pitney Bowes. It did rally and broke out of this base a little bit more yesterday. Obviously, given the fact that it's a little bit of a defensive name, somewhat defensive name, I should say. It didn't do anything dramatic. If I can get this here, this should do it. There you go. So you can see the stock breaking out. Looks good. I'm going to keep this on. Then there's Yahoo, which I bought yesterday. Also alongside, I've talked about the stock for a little bit over the past couple of days, past couple of weeks. I was bearish on it when it broke below the 100-day and the trend line here in early February, late January. But guess what? It's acting great now. Got back together. It's all about changing our minds as the market changes. It's not about remaining stubborn. It's about being fluid and remaining fluid and being with the market. And last but not least, Abercrombie also bought this one yesterday. Beauty of a stock. Broke past this diagonal line, then formed the bull flag here in over the past few days. And yesterday, with an upgrade from Credit Suisse, jumped above its 200-day moving average. It's now basically working into its August down gap here. So I think 45.50 is my first price target. On the radar, otherwise, there's a ton of stuff. It's too much to even talk about. But I would like to consider getting back into Microsoft if it can act. If it can keep up today, because I still think the stock has further to go. Again, it's not going to be one of those 20% runners, but it's a nice stock to kind of just work higher. eBay I talked about yesterday as well. I think the stock too, it's at a major area here. Basically ready to overcome its 2004 highs. So it too looks like it could have further to go, and so on and so forth. So I'm gonna just throw some of these stocks at you throughout the day today as we keep going through. Any questions, as always, please let me know. Take care.